Opendoor stock has wrapped up one of its most eventful weeks in recent memory, and as we head into the weekend, it's worth stepping back and asking, where does the company stand now? We've had a whirlwind of developments, a sudden CEO resignation, heavy retail buying, speculation of a crypto-enabled partnership, and now something that might be even more important, confirmation that legendary hedge fund manager Paul Tudor Jones has built a meaningful stake in Opendoor. It's a lot to unpack, and that's exactly what we're going to do here. Let's break down the trading action from this past week, the signals coming from both retail and institutional investors, and what all of this means for Opendoor heading into Monday. The week started with shockwaves. Carrie Wheeler stepped down as CEO, effective immediately, a move that surprised many investors. But instead of treating it as a red flag, the market reacted with optimism. Shares spiked on heavy volume, suggesting that investors see new leadership as an opportunity for a reset. Srisha Radhakrishna is now holding the interim role, and while that's not a permanent fix, it has at least stabilized sentiment in the short term. From there, momentum only built. By midweek, retail chatter was hitting a fever pitch. On Reddit, Opendoor became one of the most talked about stocks, with traders openly speculating about short squeezes, partnerships, and price targets that once seemed far-fetched. And then came Friday. The stock closed at $3.17, up more than 4% on the day, and tacked on another 5 cents in the aftermarket. That kind of follow-through after hours is telling. It means the buying pressure is still there, and dip buyers are eager to step in. This isn't just a one-and-done pop. The market is showing signs of sustained interest. Now let's talk about the headline that could make all the difference. Paul Tudor Jones has added Opendoor to his portfolio in a significant way. Jones is a legend in the hedge fund world, a trader with decades of experience navigating every kind of market. He doesn't chase meme hype. He doesn't throw money at random ideas. For him to make a bet on Opendoor, it signals that the company has caught the eye of serious institutional money. That matters. Retail momentum can push a stock higher in the short term, but it often fades if institutions stay away. When hedge funds, pension funds, and large asset managers start building positions, the game changes. It provides liquidity, stability, and credibility. Suddenly, Opendoor isn't just a Reddit darling, it's a name that professionals are willing to back. This week gave us that shift. And as we move into next week, it could serve as a powerful tailwind. Overlaying all of this is the consistent bullishness of Eric Jackson from EMJ Capital. Jackson has been a vocal supporter of Opendoor throughout its ups and downs, and he hasn't wavered even as the stock was beaten down. In fact, he's doubled down, calling for a move to $10 in the not-so-distant future. At first glance, that might sound ambitious. But when you consider the pieces on the board, heavy short interest, new institutional backing, and retail traders piling in, it starts to look less crazy. Short squeezes can exaggerate moves, and Opendoor has a short interest hovering around a quarter of its float. That's fuel for a much bigger run if momentum carries through resistance levels. The key is $3.50. That's the level that's capped rallies so far. If Opendoor breaks through with conviction, $5 comes into play quickly. And once you're there, Jackson's $10 call doesn't seem like fantasy anymore. It looks like a target in a market where narratives move stocks faster than fundamentals. Of course, no Opendoor story this week would be complete without mentioning the rumors. One of the most intriguing, though unconfirmed, narratives is the possibility of a partnership with Rome, a fintech platform that allows for crypto-enabled home purchases. Imagine being able to buy a home using digital assets, or at least integrating blockchain into the transaction process. It would represent a real fusion of real estate and crypto, and for a company like Opendoor, which has always positioned itself as a digital-first disruptor, it would make sense thematically. Now, to be clear, nothing is official. This is speculation. But sometimes, speculation alone can widen the investor base. Suddenly, crypto traders are paying attention. Suddenly, fintech-focused funds have a reason to model new scenarios. Even if nothing materializes immediately, the chatter itself adds to the buzz. Beyond all the headlines, we also need to consider the broader environment. The Federal Reserve is edging closer to potential rate cuts as inflation data continues to cool. Lower rates would be a big win for the housing market, stimulating demand, encouraging more transactions, and ultimately benefiting companies like Opendoor that rely on turnover. So even if this week felt dominated by headlines, the fundamentals might quietly be improving. If borrowing gets cheaper and housing activity picks up, Opendoor stands to benefit in a real, tangible way, not just from momentum trading. So where does that leave us as the week closes? Opendoor has managed to turn a chaotic event, the sudden departure of its CEO, into the spark of a rally. Retail traders have grabbed hold of the story, making it one of the week's most talked about names on social platforms. At the same time, institutional heavyweights like Paul Tudor Jones are starting to add credibility. Analysts like Eric Jackson are keeping the bullish drumbeat alive, with bold calls for $10. And in the background, speculation about partnerships and macro tailwinds are providing additional fuel. The result? A stock that closed the week stronger than it started, one that's showing signs of building a real base, and one that's positioned for another test of resistance as we head into Monday. The key levels to watch remain the same. 350 is resistance. A clean break could open the door to $5, and from there, momentum could carry the stock even higher. Investors should also keep an eye on news flow. Does Srisha Radhakrishna, the interim CEO, accept Anthony Pompliano's open invite for an interview? That kind of media moment could amplify the story further. Do we see any more filings from hedge funds confirming new positions? That would validate the idea that institutional buying is more than just one big name. Above all, the story of Opendoor heading into next week is one of alignment. Retail enthusiasm, institutional interest, and macro tailwinds rarely come together all at once. When they do, stocks can move in ways that surprise even the most seasoned investors. So as we close out the week, Opendoor sits at a fascinating crossroads. It has the attention of retail traders, the backing of a hedge fund legend, and the possibility of fundamental improvement. Whether that adds up to $5, $10, or something more will depend on how the next few weeks unfold. But one thing is clear, this week has changed the narrative. Opendoor is no longer just a beaten-down real estate stock. It's a story stock again, and one that everyone will be watching as we head into Monday.